All right, all right. All right, we live here both Facebook and Instagram. Hello, everybody. How y'all doing this Saturday afternoon? Welcome to the Bo Knows Podcast. We're just gonna be listening and not looking today. First, I like to say congratulations, to all my business owners that are still in business and doing good business because these days are very different. Also, support other businesses, small businesses, and local businesses. We all have a duty to fulfill. So again, congratulations to all my business owners and upcoming entrepreneurs. Yeah, it's a different day, so we need to help and support one another. But to my up and coming entrepreneurs and people whom are thinking about becoming entrepreneurs, now couldn't be a better time. I know that we're in the middle of a pandemic, but during bad times, good things are revealed and happens. So if you happen to decide what business you want, or are you undecisive of what business you want to get into, look at yourself and decide, what you love doing, what kind of hobbies you have, all of that good stuff. So right now, it's a perfect time to be in business for the young entrepreneurs. Again, I want to say hello to all my entrepreneurs and continue doing your business, continue with the success. We wish you much success. We got a lot of things coming for entrepreneurs other than what we're doing. We're trying to share information, get it out there. And today I'm going to talk about, corporations and becoming an entrepreneur, what to do and how to structure yourself. This information very important, where some people are in business and not really structured or set up correctly. So being in business and having a good structure is very important. And I'm going to talk about that as well. First, I want to discuss what is a sole proprietor or sole proprietorship. I know some people have heard of that and probably wondering, well, what is that? And keep in mind, I'm not an attorney. Now am I providing legal advice? This is just informational purposes only. You can take it for what it's worth and use it to your advantage. A sole proprietor, also known as a sole trader, individual entrepreneur, or proprietorship, is a type of enterprise that is owned and run by one person, in which there is no legal distinction between the owner and the business entity. So, you're a one owner, you own your company. That's a sole proprietor. A lot of people are set up like that. A sole proprietor does not necessarily work alone. It's possible that the sole provider has, or provider or sole trader, which they're referred to as different names, have employees. But let's talk about sole proprietors, because out of 26 million businesses that are in America, about 20 million are sole proprietors. So that is something to really consider and look into, because sole proprietors may not be the best way to go as an entrepreneur. It is cheap to do. It is inexpensive to set up. You are getting yourself a start, but now it's time to structure yourself correctly. And I'm going to talk about that. You and your business are one and the same. So keep that in mind. If you're a sole proprietor, you and your company is pretty much the same. You acting as your company, and your company is acting as you. You're not building business credit separate from your business neither. So as a sole proprietor, you are your company, and you're not really getting credit on your social neither. As you build the company, well, you are in a sense, because you're using your personal credit, but you're not separating the two entities, and that's important. Company can get sued. If the company gets sued, or if you get sued personally, then both of you guys are responsible, vice versa. So either one. So as a sole proprietor, you're responsible for, things that the business do. Now, I'm gonna give you an example in a minute. Chance of getting audited is more likely. I don't know if some people heard, but as a sole proprietor, you're more likely to get audited than a corporation for multiple reasons. It is insane how they put the information out there about how, sole proprietors can be, considered auditable. You can get audited real easy. Why do people use sole proprietors over, any other structure, corporation, LLC, C Corp, LLP, whatever it may be? Because it's cheap to set up. It's cheap, it's inexpensive. You know, it don't cost a whole lot. So it is a great start. But once you start doing business and start getting employees and start getting people on board and, you know, start hiring and different things like that, you might want to consider structuring yourself a little bit better than what you are now. So if you are a sole proprietor, look into other ways, consult an attorney, you know, someone that can help with building or structuring you the right company, because sole proprietors can become a problem or problematic down the line. And here's an example. Let's say, for an example, someone is driving a delivery truck, you know, and for your company or your sole proprietorship, right? And they're drunk and they have a bad accident. Then your sole proprietor is responsible, and that makes you responsible. So now that this particular person had an accident while under the influence of alcohol, you're responsible now. And now they can come out to your savings, your home, your retirement. They can access, you know, all of your assets. So that is something to consider. So now you put your assets at risk when you are just a sole proprietor, not structured correctly. It is very important to understand the advantages and disadvantages due to. So it's very important to understand that, because sole proprietor, now you're putting yourself at risk and you're putting your company structure at risk, all of your items and assets that you built up, your home, etc. So keep in mind the disadvantages and the advantages of sole proprietor. And also the fact that your employee, because you can have an employee as a sole proprietor, and keep in mind it's just you. That's why it's called a sole proprietor. You own it by yourself. And you didn't have insurance, and even if you did have insurance, that wouldn't be covered. So that particular person that had that accident, you know, not insurance don't cover that person because you're a sole proprietor, and they're coming after you. Attorneys and whoever that person destroyed or had accident with, they're coming after you and your savings, your home, and all of that. So it's very important to kind of keep and understand the structure of your business. And the fact that you had insurance wouldn't cover because that person was drunk. So a drunk driver, again, has an accident driving one of your vehicles as a sole proprietor, makes you very responsible. You're liable for that. Partnerships. Let's talk about that. So, and then I just explained, you know, what is a sole proprietor, and I was breaking that down. So yeah, sole proprietor is definitely, you know, it's kind of the way to go, but not the way to go. But it's cheap to set up a sole proprietor. But once you get your structure correctly, you know, set up an LLC corporation or whatnot. So kind of figure out a different method or way to set that particular business up. Now let's talk about partnerships. Let's dive into partnerships, because a lot of people got business partners out here, you know, want to know how do it work? What do we do? You know, partnerships can be good or bad. It just depends. You keep in mind you have a partner. It's almost like a business marriage. You know, so when you get involved with a partner, it could be good and bad things. It just depends who your partner may be, you know, what type of energy your partner brings to the table. So partnerships can be good and can be bad. You know, the aspects of our partnerships, you know, you both will be responsible for whatever you do. So if you do own a partnership or you kind of get in business with a partner, keep in mind both of you guys are responsible, but you are responsible on a certain level. You know, one partner may be more responsible than the other, and all of this can be established in the early stages of putting together your partnership. But again, partnerships are good and bad, just depending upon who is looking at it and what the business consists of. You know, you have two types of partnerships within the partnership. You have what's called a general partnership and a limited partnership. So the general partner is more or less in charge. They're more responsible for taxes, etc. You know, then you can have what's called a limited partnership, where that particular partner is not really as responsible as the, you know, general partnership. And then you have your silent partners and all of that. So there are advantages and disadvantages to partnership. Just keep in mind whom you are doing business with. Benefits is that the company pays no income tax. So just the partners and what they are limited to. So if a partnership is only limited to a certain percentage of that particular company, they're responsible from a tax perspective. So that's something you can consult, you know, your tax preparers or attorneys or tax accountants someone like that to kind of give you more detail. But partnerships can be great. They can be a disadvantage because one partner might not be as aggressive as the other partner. So now you running into issues and all of that. But from a legal perspective, it's not a bad thing because you can keep the partners separated. And this is good for real estate and stock investment groups. So partnerships are not bad. It's just how you build and deal with the partnerships. What is a partnership? How they work? All of that. If your partner is kind of like you, got the same energy and drive and ready to go. So partnerships are not bad, but just understanding the partnership is very key, very critical. Next, I want to talk about, let's jump over here and let's talk about what is better, LLCs or INCs. A lot of people ask, well, what is an LLC? What is an INC? And what is the difference? Well, LLC is limited liability corporation. INC is just incorporation. You're not a sole proprietor. So now you incorporated, and let's get into that. The main difference between the LLC and the corporation is that the LLC is owned by one or more individuals, and the corporation is owned by its shareholders. So for those of you that are looking to do funding down the line, or we're going to explain this too, I got other podcasts and videos and stuff explaining how to raise capital based on your shareholders and your stock that are issued in your company. So a lot of people now are wondering, well, how do I get ahead? How do I get ahead and how do I start building funding, being that funding is a little bit tight, right now from the bank's perspective, rather, but, it's still good in the business world. SBA is definitely doing a lot of funding, but once that stops or, then we're going to get back to, releasing what's called the credit freezes that is out there. A lot of banks will have credit freezes on, different things because, of course, the SBA kind of kicked in. But, no matter what entity you choose, both offer big benefits, whether it's an LLC or INC. Other benefits, people incorporate for lots of reasons, but the main reason people do it is because it gives their business a superpower called limited liability. So now the limited liabilities give the owner of a corporation protection from the corporate creditor. So now here's the benefit, unlike a sole proprietor. So if you have an LLC or a corporation and you are sued, like say, go back to that same scenario where the drunk driver on a sole proprietor was operating one of your company vehicles. And this actually happened to one of our clients a few years ago at a big tow company. And man, it destroyed their $1 million industry, because they had their company information still on this truck. Thus, the employee was fired. So, as a sole proprietor and structured correctly can be detrimental and advantageous to your company. So back to that scenario, in the event you have someone driving your vehicle and you're a sole proprietor and they have an accident, now that whoever creditors or whoever that he destroyed or she destroyed, they're coming after your company and your assets. As a sole proprietor, they can come after everything. Home, vehicle, the company, you, because you're not structured correctly. But if you're an LLC or INC, now it's limited only to the corporation and its assets versus your personal assets. So keep in mind, it's very, very different and very good reasons to have an LLC or INC established. Limited, like I say, it gives owners corporate protection from corporation creditors. So if you owe any creditors out there, they're not personally coming after you. They actually coming after your company. So, you're protecting yourself, whatever you built on the company, and say you owe this particular creditor, you got a line of credit, $100,000, and the company files bankruptcy because you didn't succeed, unlike what your intentions were, then they can't come after you personally because your structure was correct and you were structured right. This means also that the corporation and the owners, if you go bad, they can't come after that. So your personal assets, again, is protected. LLCs, the easiest entity to maintain with the least amount of formal annual requirements. So some people who do have a LLC notice that at the end of the year, they don't have to, make sure their company is not dissolved, and they have to go back and do what's called a resolution. So LLC is considered perpetual, and you can kind of get into all those details later. But you don't have to, every end of the year, set up your board members and have your meetings and report that to whatever state that you're incorporated in. So INC, it is required, but LLC, it is not. INC meetings are required to maintain the corporate status. So, stocks may be sold to raise capital and all of that as well. So the difference of an INC and an LLC, right? You got to maintain the corporate status, and you can also sell stock to raise capital. So that's another form of funding that your company can do. But the fact that you can issue stock and all that and have stockholders and shareholders, different stock proximity and different things of that nature, then you're more required to have what's called minute meetings on a yearly basis because of what you are doing and what type of investment, and there are people involved. Just keep in mind, whenever you are dealing with people, the laws and everything protect the people, even though we are all people. But once you become a business, your sole duty is protect the individual. I know some people have heard that term, customers are always right. Into a sense, they are. So the laws and everything around it really protect the consumer. So that's what this is really about, the protection of the consumers and protecting yourself. LLC combines limited liability protection with a pass-through tax structure. So again, LLCs do have different tax brackets and different structures, so you can consult with your tax account, but they're not bad at all. Also, INC owners, shareholders have limited personal liability for business-related debt. So the owner of an INC, the shareholders is not really responsible, again, because you issue in shares. They're just really investing in your idea, and your stock, rather. Like if we invest in, say, Bitcoin, you just or whatever stock, you just investing in the stock, and whether the movement go up and down, you're not actually involved in the day-to-day activity. You don't have to worry about if something go wrong. The only thing you're concerned about if your money go up and down. You're not really responsible for all of the, day-to-day business activity. Both LLC and INC is limited to personal issues, kind of like that example as a drunk driver. So you're protected there. You don't have to worry about, the sole proprietor issue. Also, you are taken more serious. If you have a company and you have, ABC LLC or ABC INC, people take you very serious now. So it's definitely important to get incorporated or get your structure set up. Both structures basically protect you more than the sole proprietor. And that's key. So that's a real big, important facet or fallacy when it comes to, corporations and LLCs versus sole proprietors. And again, you got over 26 million small businesses and 20 million are sole proprietors. People need to start thinking, man, because once you start making money, attorneys on the other side see dollar signs. And if you're making a lot of money, you're not paying attention to the lawsuits and insurance and stuff like that can come, and boom, there you have it. I see a lot of people start off and become successful, then put out a business only because they wasn't structured in the very beginning. Another important factor, some people ask, well, if I am a member, should I do member or managements of my LLC? And that's a good question. So I can explain a little bit, what the member and management role consists of. A managed member or managed manager, let's start with that first, is a good option for an LLC with several members, with some members who want to invest only, not be involved in any decision-making process. The dedicated managed member do not need to get approval of the investors to make decisions. So your company can be either member managed or manage, and those are important things as well, which one would be best for you. And it really depends on your corporation. What are you doing? Are you planning on issuing stock down the line? Are you the tax structure? So, and you can have it managed based on different memberships. So there are different roles based on that LLC and management of that LLC. Let's go to the next topic. The next topic is that I want to kind of discuss, and this is huge because a lot of people, they're not quite sure, and I must probably spend 5-10 minutes really talking about what is better for you, S Corp or C Corp. All corporations even the S Corp starts as a C corporation. If you run an incorporated business in the United States and you haven't filed for an S Corp or LLC status, you're automatically considered a C corporation by the IRS. And I'm explaining the difference of a C Corp and the S Corp and kind of what those are. So once you set up a corporation, if you don't structure whether you want to be a C Corp or S Corp, you are automatically, by the IRS, considered a C corporation. So now you are a C corporation. I'm sorry, I'm just kind of looking at my IG followers, making sure I'm not jumping off the connection here because it keep connecting and reconnecting. So if y'all can hear me sign out there, appreciate it. Just wave. Appreciate you guys. Give some waves there. Thank you. Thank you everybody for joining again. And again, Bo_Knows_credit on IG, the underscore credit underscore university on IG. Also YouTube, Bo Knows Business and Help. So that's a lot of information we're going to be passing out to you guys and all of that. So let's jump back into what is better for you, S Corp or C Corp. Now, the IRS automatically consider you a C corporation, and a C corporation is taxed double. So, I mean, so there you have it. So if you don't structure yourself correctly, they're not going to tell you what to do. You got to figure out what to do. Again, I'm not providing legal advice, nor am I an attorney, but this is just for informational purposes only. So they're going to automatically structure you as a C Corp, which is taxed twice. Tax on earning and tax on shareholder dividend. So whatever you earn as a C Corp, you are taxing whatever your tax holders own in that company, they're taxed. So, and if you are a tax holder or a shareholder yourself, you are taxed again. So that's a big problem. So understand the difference of a C Corp and the S Corp. And it could be a benefit depending on, again, what it is that you're doing or what you plan on doing down the line. S Corps don't technically pay taxes, the owner do. But an S Corp can't have more than 100 shareholders. So if you're trying to, incorporate and get more people to buy stock. So typically a lot of these companies as, trading on the Dow Jones or the NASDAQ 30 or what have it, the German 30, whatever market they're trading on, they're not S Corps because they pretty much want to have as many shareholders as they can. They want people to invest in their stock. The more investment in the stock, the more capital they raise, the more things they can do with the money. So keep in mind, that's a big, huge difference of an S Corp and the C Corp. The S Corps don't technically pay taxes, the owner do, but the S Corp cannot have more than 100 shareholders. And a C Corp is taxed double. Keep that in mind. And the IRS automatically consider you as a C Corp when you don't enter your correct structure. Also, they all have to be U.S. citizens, and they can only be one class of stock. For an example, say if you are selling or issuing stock, then the C may make more sense over the S Corp. So that's when the C Corp becomes beneficial. And again, maybe the reason why they're taxed double. I don't want to get into too many details that I kind of understand it a lot, but it'd get a little bit convoluted if I was to jump down and go over that. But the C Corps may make more sense than the S Corp in the event you are selling and issuing stock. S Corp do have restrictions, such as no more than 75 shareholders and no preferred stock. So you can still have shareholders and you can still raise capital. And the reason why I'm talking about this, because down the line, I'm going to introduce people to other ways of raising funding for their business, other than building their personal credit, which is important, building their business credit, which is also important, but just having a business plan and your structure correctly. Now people will invest in you. You don't have to necessarily go to the banks. We never know. We might be coming to these times. It might be a time where after the fiat currency start to dissipate and run out and you lose that control, you don't have any funding, then how are you going to raise capital? So you got to be preparing yourself. And that's what we're doing here. Try to prepare people from a technical perspective and from just a business perspective on what to do down the line in the future. And I'm going to talk on another podcast about technically what's going on, how the monetary system is changing, get rid of the coins and the dollars, and everything is going to be digital. It's cheaper to do that. It's cheaper to attach things to what's called a blockchain. The cryptocurrency ain't popular for no reason. It's the blockchain that it's attached to, and your company as well can be a part of that blockchain. So keep in mind, there are different ways in raising capital. So the fact that you can only have 75 shareholders, that limits you on that particular S Corp. But if you're not thinking about stocks or shareholders, then maybe that's not important. A C corporation pays taxes on its income. Plus, you pay taxes on whatever income you receive as an owner or an employee. Keep that in mind. An S corporation doesn't pay tax. Instead, the other owners report the company revenue as personal income. So an S corporation, again, has their benefits, pluses and minuses. An S corporation doesn't pay tax. Instead, the owner reports the company revenue on the personal income. So now you're not really double taxed there like you would if you was a C Corp. But again, you can't have as many shareholders as a C Corp being an S Corp. It just depends on your preference. If your company is making profit, you might want to take some of that money out the company. It's generally cheaper to do an S Corp than a C Corp. So if you're a small business entrepreneur, you can start off as an S corporation and start to grow your company. You might need to flip it over, switch it over, whatever that may consist of. So it's very important to understand the difference, because there is a huge difference between S Corp, C Corps, LLC, sole proprietorships, which again you have. And just to recap, sole proprietorships are individually owned businesses. You can have a business, you can still have employees, but if anything happens, then you are responsible as a company and you are responsible as an individual. So the LLCs can be, a benefit for those people who are considering just taking their company to another level. So it's cheaper to start a sole proprietor. Let's keep that in mind. If you start a sole proprietor and you don't, have the funds to set up your corporation or whatever the case may be, then you want to get going, then that's a good start. And then every state charges different. Nevada have different fees, Delaware, Texas is extremely, they kind of expensive when it comes to incorporating there or registering a foreign corporation. And what I mean by that, if you're incorporated in the state of Atlanta and you want to incorporate in the state of Texas, then you got to register what's called your foreign corporation in that state to do business, because that state is considered every state rather is considered its own sovereign state. So you got to register to do business and of course apply for loans and whatever it is that you are doing in that state. So setting up the corporation and registering foreign corporations and getting what's called corporation in good standings, all of that stuff, that could be very expensive, for individuals and people that's out there. So again, just to recap, structures of your companies are fantastic. You want to kind of find out what benefits you. What are you interested in? If you need more details, kind of hit us up. Again, Facebook, Instagram, we here live. Come check us out. IG, follow us. Again, like, share, comment. So if you're interested in any of these particular services, let us know. We can help. There's a lot of information out there on Google. I like to give information to people. The game is to be sold and told. So it just depends on, what it is that you're offering. For the people that's around me and that's following us, I like to give them information. Some things do cost, some things require time, and some people can't do it themselves, and you should pay for a service that you can't do yourself. We all can cut our grass and shovel our snow. But if you don't have the time, then why wouldn't you pay someone else to cut your grass and shovel your snow? Because you can use that time, focusing on your business and your endeavors and growing your company and training your employees and all of that good stuff. And again, I'm going to be speaking more on, entrepreneurships. I'd like to congratulate all the entrepreneurs again and all the upcoming entrepreneurs, because we're in a different world. The world is totally different. It is not going to be the same. Not at all. It's things are changing. Things are being implemented, and I'm watching the status of, the monetary system flip, the loaning and lending practicing change, so that's going to take a lot of people out the business, and that's going to bring a lot of people in business, just what side of the street you want to be on. So again, I'd like to thank everybody for taking this little Saturday afternoon, little time, 30-minute talk just about companies and what you should do. If you need any more information, feel free to hit me up. Again, enjoy your Saturday afternoon, just a little bit of food for thought for those of you that are entrepreneurs and thinking about becoming entrepreneurs. Again, congratulations to your success. We will be putting, and shedding light on entrepreneurs and companies on our channels, on our YouTubes, on our videos. We'll be helping promote, man, because that's what it's about these days, coming together and promoting young, small businesses. So I'd like to say thanks for everyone's time and have a good afternoon and enjoy your Saturday and this great weather, wherever you may be. Thanks a lot.